Very good day to you all. Yes, today marks the week 7 of our journey on this course, BFM 104 Element of Banking. Actually, today we're taking the last topic, and the topic talks about bank financial statements and their interpretations. As usual, I expect your rapt attention while we journey on this very interesting and interactive section. Thank you. Of intended learning outcomes. At the end of this class, the students should be able to one, define the concept of financial statement. Two, they should be able to give the meaning of the statement of financial position and its interpretation. Three, students should be able to analyze the statement of comprehensive income. And finally, students at the end of this class should be able to discuss the statement of cash flow. By way of introduction, it is of utmost importance to a business that its financial health is measured from time to time. Hence, the need for financial statements to be prepared to be able to ascertain the true health and true position of the organization. A comprehensive income statement or statement of comprehensive income, as it is called today, is one of such financial statements. It helps decision makers to ascertain the performance of a business for a specified period of time, usually 1 year. A statement of comprehensive income provides the user of financial information relating to revenue generated by a business and the expenses incurred for generating such revenues. Financial statements. What then are financial statements? A financial statement, therefore, is the record of financial activities that have taken place in a firm, in this instance, in a bank, within a given time frame, usually 1 year. This statement comprises the comprehensive income statement, that is called or formerly called the profit and loss account or the income statement, and the statement of financial position, previously called balance sheet, the almighty balance sheet. These financial statements ascertain the profitability level of the firm and the value of the firm, because considering the assets of the firm and how these assets will actually be funded. And the cash flow statement, where necessary by the time of international financial reporting standards. However, the bank business, due to its peculiarity, has slightly different format with respect to its financial statement. Statement of comprehensive income. The statement of comprehensive income ascertains the profitability level of firm and the value of such firm, considering the assets of the firm and how these assets will actually be funded. Income statement, that's the report of income for the period ending December, for instance, 2008. It also considers the revenue. The revenue is delivered in bank services. That is the output. Here we talk about the income on loans. We also talk about deposit services or deposit service fees, fees that are collected on services for such income. For instance, the investment income. How much income is realized on investment by banks? They form part of the comprehensive income statement. Another aspect of the comprehensive income statement is the expenses. That's the cost of inputs realized on the resources. Here we talk about the interest paid on deposit. We also talk about the employee compensation. Here the salaries and wages of staff are computed and taken care of in the comprehensive income statement. The provision for loan assets and other expenses could be administrative expenses, can be out of depreciation expenses, and expenses incurred on electricity, transportation, and other allied expenses. Before we now have the income before taxes. Income before taxes, that is profit before tax, is now computed. And after that, after the taxes are taken care of, the corporate taxes are taken care of, we have the profits or the gains and the losses from operations. Once we get the gains and losses from operations, we now have the net income. That's the income after taxes have been taken care of and other expenses. Statement of financial position. Yes, the statement of financial position was previously known as the balance sheet. It provides a snapshot of the financial position of a business at a particular point in time, usually a business financial year. The statement of financial position is another effective financial statement utilized by both internal and external users to ascertain the financial state of a business. It identifies the assets of a business and the various forms of funding, that is, equity and liabilities, employed in acquiring the assets. So the statement of financial position considers the assets and the liabilities. It shows the level of assets acquired by a firm and the level of funding used in acquiring such assets. It talks about the credits and as well as the debits in the form of liabilities and equity inherited on the bank at a given point in time. That is the equity, the providers of funds. Bank statements of financial position, that's the report of the condition. Bank statement of financial position shows the level of assets acquired by a bank and the level of funding used in acquiring such assets in the form of liabilities, as stated before, or the equity inherited on the bank at a given point in time. So the report of the condition talks about the financial output versus the financial input. So when we're talking about the financial output, we talk about the uses of such bank funds. That's the assets. We talk about the loans and the leases. We also talk about the cash and deposits from securities. Whereas the financial input, that's the sources of bank funds, we talk about the deposits from the public, deposit liability, and the non-deposit borrowing in terms of equity capital from owners. So we have the users of bank funds and the sources of the bank fund. And note that the sources talks more of the deposits of the depositors and the equity providers, whereas the users we talk about the debtors, the cash, the loans, and the leases. Don't forget that the total assets must be equal to total liabilities plus equity. That's a simple equation. Since banks are engaged in business of selling a special kind of product, that's funds, the bank statement of financial position equation, therefore, that assets, which is represented by letter A, is equal to capital, represented by letter C, or assets is equal to liabilities, letter L, plus equity. Then class activity for today. So far, so good. We have been able to look at what financial statements are. What are these financial statements? We have identified statement of financial position, otherwise known as balance sheet previously. We also identified statement of comprehensive income, previously known as profits and loss account or income statement. And finally, we've also identified the cash flow statement or statement of cash flow. So students should be able to identify 3 of these key statements. And again, students should be able to state 2 components each of the financial statement as identified now. Bank assets. For the banking firm assets, statement of financial position comprises the following: cash, that is cash in vault and deposits in other banks. The cash in vault and deposits in other banks constitute the assets. Meanwhile, it is not the deposit in the bank, because the deposit in the bank by the public constitutes liabilities. Gain is interest-bearing securities, either in government or in private, purchased in the open market. Loans and leases, financing provided to customers, and miscellaneous assets to various customers, and non-deposit borrowings of funds in the financial market. Financial market here, we talk about the money market and the capital market. Then finally, the equity capital, which reports the long-term fund as per owner's contribution to the bank. So the capital comprises the equity capital, that is the capital that is provided by the owners, as well as, and this capital provided by owners constitutes the long-term funds, which serves as a shock absorber for the bank or the financial institution. Bank asset continues. The cash assets enables the bank to meet its liquidity needs in order to consider the deposit withdrawals deemed for loans and other agencies. Security handlings such as backup to cash with respect to solving liquidity issues. They can be easily transformed to cash. Banks invest in liquidities, in treasury bills and treasury certificates, and such liquid assets can be easily transformed to cash. They also form part of bank assets. Another important aspect of bank assets is loans. This one is basically a key supplier of income to banks, as loans are given to the deficit sector. Mark you, when we look at the intermediation role of banks, banks move funds from the surplus sector of the economy to the deficit economic units in need, while miscellaneous assets are funds from the fixed assets, the property, the plant, and equipment owned by bank and investment in other subsidiaries. The deposits, these are the main source of bank funds with non-borrowings, NDV, coming to supplement it by providing additional liquidity that cash and securities cannot provide. Equity capital, this supplies relatively stable long-term funding or financial support to bank. The bank's growth or cushion for extraordinary losses. Yes, the equity capital supplies or is a source of financial support and enhances the stability of the bank. And besides that, it cushions extraordinary losses and bank liabilities. Actually connotes accumulated sources of funds. While bank access, on the other hand, are accumulated users of funds for the purpose of generating income or pay interest to depositors and compensate for the bank employees for their labor and skills. Cash flow statement. Funds provided to the bank are for a specific period. On the other hand, funds provided from operations form a decrease in bank assets and also increase in bank liabilities. So cash flow statement is very key as it helps to ascertain the health, the financial health, the cash position of that bank at any point in time. Funds, it considers the sources of funds and it also considers the applications of funds. Funds used by banks during a specific time period. We also look at the dividend that's paid out to stockholders, the shareholders of bank assets, as it increases the bank assets and also form a decrease in the bank holder. Funds provided to bank over a specific period also constitutes funds used during the same period of time. So cash flow statement or statement of cash flow, as it currently calls, is very important as it considers the providers of funds and also the users of funds. And not just the users of funds within a specific time, and it must be cash denominated. Hello, hello. Oh, Professor. Bro, I need you, sir. So sorry, this our work. I'm sorry. I'm sorry, sir. Thank you, sir. Thank you, sir.